Good day, Matashastic. Welcome back to our FABM 2 class. It's me again, Teacher Sol, your majestic maestra. Our topic for today is the forms of SFP or Statement of Financial Position. The learning competency for this topic is to prepare an SFP using the report and the account form with proper classification of items as current and non-current. What are the two forms of SFP or Statement of Financial Position? You are correct. The two forms are the report form and the account form. Let us have first the report form. In this form of statement of financial position, the assets are listed first, followed by liabilities and owner's equity. This is the statement in a vertical position. This report of statement of financial position is used when there are few accounts involved. Here is the example of a report form. It is reported in a vertical position with asset first, then liability, then owner's equity. Second is the account form. This is patterned after the basic accounting equation. Asset is equal to liabilities plus owner's equity, wherein the assets are shown at the left-hand side while the liabilities and owner's equity at the right side. This is the statement of financial position in a horizontal position. This account form is used when there are plenty of accounts involved. This is an example of an account form. It is patterned with accounting equation. Assets must be placed at the left-hand side while the liabilities and owner's equity at the right side. Let us apply the two forms in this particular information. We need to prepare a properly classified statement of financial position for graduation company as of December 31, 20X1. We have accruals and other activities, bond payable, cash and cash equivalent, current income tax payable, intangible assets, net, investment in associate, investment in equity securities, investment property, long-term notes payable, merchandise inventory, office and more and store supplies, other non-current assets, other non-current liabilities, owner's equity, prepayments and other current assets, property plant and equipment net, short-term notes payable, trade and other payables, trade and other receivables. How to prepare the statement of financial position? Remember, financial statements are made after the trial balance or adjusted trial balance if there was an adjustment made. Preparation of a statement of financial position. You have to write first the name of the company, which is graduation company, name of the financial statement, the statement of financial position, then the period covered as at December 31, 20X1. In preparation of the statement of financial position, you need to classify the account titles into current asset, non-current asset, current liabilities, non-current liabilities, and equity. That is the best strategy that we need to follow. Let us now classify all the given account titles here. 1 is the accruals and other current liabilities. It is current liability. Next, bond payable. It is non-current liability. Cash and cash equivalents. It is a current asset. Current income tax payable. It is a current liability. Intangible assets, net, is a non-current asset. Investment in associate is also a non-current asset. Investment in equity securities is a non-current asset. Investment property is also a non-current asset. Long-term notes payable is a non-current liability. Merchandise inventory, it is a current asset. Office and store supplies is current asset. Other non-current assets, obviously it's a non-current asset. Other non-current liabilities, it is a non-current liability. Owner's equity is an equity. Prepayments and other current assets is considered as current asset. Property, plant, and equipment net is a non-current asset. Short-term notes payable is a current liability. Trade and other payables is also current liability. And the last, trade and other is a current asset. Now that you have already classified the account titles into different current and non-current assets, current and non-current liabilities, and equity, it is time for you to merge those current assets with the given amounts, which are the cash and cash equivalents, 2,500,000, merchandise inventory, 2,789,000, office and store supplies, 400,000, trade and other receivables, 1,865,000, prepayments and other current assets, 385,000. This is how it looks like. You need to add all the amounts on the current asset. Start with cash and cash equivalent, 2,500,000. Trade and other receivables, 1,865,000. Merchandise inventory, 2,789,000. Office and store supplies, 400,000. Prepayments and other current assets, 385,000. You need to add all the amounts on the current asset. It will give us total current assets as 7,939,000. Next, we will merge the non-current assets, which are the intangible assets net, investment in associate, investment in equity securities, investment property, other non-current assets, property, plant, and equipment net. So this is now the merging non-current assets with their corresponding amount. Property, plant, and equipment net with 9,856,250. Intangible assets net, 2,654,700. Investment in equity securities, 3,650,400. Investment in associate, 1,890,600. Investment property, 1,968,740. Other non-current assets, 600,000. For a total of non-current assets, 20,620,690. Now, we are ready to merge current assets to non-current assets by adding the total current assets and the total non-current assets. So we have here total current assets, 7,939,000 plus the non-current assets, 20,620,690. So for a total assets, 28,559,690. Let us move on now to our liabilities. Let us first merge the current liability, accruals and other current liabilities, current income tax payable, short-term notes payable, trade and other payables. We have now here the current liabilities with their amounts. Trade and other payables, 1,562,890 plus the short-term notes payable, 320,000 plus the current income tax payable 589,660 and plus accruals and other current liabilities 125,890. Total current liabilities is 2,598,440. Proceed to the non-current liability. We have bonds payable, long-term notes payable, other non-current liabilities. So let's merge the non-current liabilities by adding these three non-current liabilities. Bonds payable with 5 million, long-term notes payable 2 million, other non-current liabilities 750,000. For a total non-current liabilities, we have 7,750,000. Let us now combine current liabilities and non-current liabilities by adding the total current liabilities and the total non-current liabilities. So total non-current liabilities is 2,598,440 plus the total non-current liabilities 7,750,000. So our total liabilities 10,348,440. Let us proceed now to the owner's equity with 18,211,250. We are now ready to add the total liabilities and equity. So for the total liabilities with 10,348,440 plus the owner's equity 18,211,250. So our liability plus equity is equal to 28,559,690. Let us now discuss the report form balance sheet parts. You need to follow the 4 steps. 1. Write the name of the business, title of the report, and the date as of a particular date. Number 2. Classify the assets into current or non-current and present this in order of liquidity. Number 3. Classify the liabilities as to current and non-current and present this according to the earliest obligation to mature. This is now the report form balance sheet of graduation company with the assets, the liabilities, and the equity. So the total is 28,559,690. Let us proceed now to the account form balance sheet format. Assets with the current and non-current assets placed at the left side. Then, at the right side, we have the liabilities with current and non-current liabilities plus the owner's equity. Now, why is it account form? If you try to observe, it looks like a T account where the normal balance of the asset is the debit side at the left side and the normal balance for the liabilities and equity is the credit side or in the right side.